Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenevec on Bloomberg Radio.
Well, as we mentioned a little earlier in the program, President Trump is in Saudi Arabia on his first scheduled overseas trip since taking office earlier this year. He did visit the region back in 2017 during the first term. He did, of course, go to Italy, Vatican City, too, for the Pope's funeral a little earlier this year. This time around, though, Saudi Arabia is looking to boost investments in the U.S. to $1 trillion, with $600 billion said to be already committed. As for the U.S., it's considering letting the UAE buy over 1 million advanced Nvidia chips, and with Saudi Arabia specifically, about a relationship that's more about friends rather than foes.
I have never believed in having permanent enemies. I am different than a lot of people think. I don't like permanent enemies, but sometimes you need enemies to do the job, and you have to do it right. Enemies get you motivated. In fact, some of the closest friends of the United States of America are nations we fought wars against in generations past, and now they're our friends and our allies.
Well, there you have it. President Trump just a little earlier today in Saudi Arabia. For more on the relationship between the two countries and really the U.S. and the Middle East as a region, let's go to L.A. and to the executive director of the independent nonprofit Middle East Forum, Greg Roman, joins us now. Greg, I just want to start with, based on what you heard from President Trump a little earlier today, how you would characterize the U.S.'s relationship with the Middle East, and specifically how it's different than previous administrations.
Well, I think that what President Trump is looking for is partnership instead of ownership over the region. He expects that there be a quid pro quo between the United States and its trade, commercial, economic, and military relationships with Middle East allies. But there's also some sublayer here that I think the administration needs to be wary of, where in countries like Saudi Arabia and the United Arab Emirates are looking to foster closer relations with the U.S., with our businesses, with our markets. There's other countries like Turkey and Qatar, even though he's not potentially visiting Turkey unless there's that deal with Putin and Zelensky on Thursday, that are looking to influence the United States to outstretch their interests to the U.S.'s disadvantage. So there's two positive visits here and another one that I would be very aware of when he goes to Doha.
Greg, the president's saying, now there are friends and our allies talking about Saudi Arabia. And I'm just curious, what does being friends and allies really look like going forward between the two? And where does that kind of leave the U.S. and its historical allies?
All right. Well, I think that Saudi Arabia and the United States have been historical allies since the meeting at Yalta.
But it's I guess every relationship's complicated, but it feels like this one's been a little bit more complicated.
Well, okay, let's go to 9/11 for a second.
Exactly.
After 9/11, and you had 14 years of animus between the United States and Saudi kings and princes because of their failure to own up to what was the resultant relationship of having cover for the bin Laden family. But Mohammed bin Salman becomes crown prince in 2015. He quickly starts to reform the kingdom, starts opening up its markets, asking for more investment in the United States, even goes so far as to invest money in an Israeli-led hedge fund. For the last decade, MBS has been at the forefront of trying to crystallize and closen relations between the United States and Saudi Arabia. The UAE, going back to the early 90s, has been in a close defense relationship with the United States since the Gulf War. But the third country that I mentioned, the Qataris, that's the one that I'm still wary of, considering the fact that they have huge influence operations and even espionage against members of the United States and also people who were even close to Trump's family.
Okay, so let's go there and give us exactly what you're concerned about, especially in the context of a potential gift of a presidential jet.
Well, I think this goes beyond the presidential jet. I understand why the Defense Department would try to have an interim solution for the lack of Boeing being able to deliver on Air Force One, which is now expected by 2029. But I think security considerations will put that aside, and the Secret Service won't sign off on that, even though I understand the token gesture. The larger issue is the $47 billion that Qataris have invested in American higher education, K through 12, businesses, our university systems, political lobbying to the tune of almost $78 million over the past few years, all with the intent of trying to buy both sides of the political aisle. And I don't think this is anything that really extends to the administration. But what the Qataris have done is try to create a white picket fence around their areas of influence on Republicans and Democrats, that whichever way American politics go, the Qataris will be there to win.
So why, I don't know, maybe this sounds naive. I mean, what is it that we need to be wary most when it comes to extending our relationship throughout the Middle East? I mean, we have relationships, right, with other countries, with other regions. There are investments that we encourage. We have a White House and president who is big time encouraging investments by everyone outside the United States into the United States. So what is it in particular at this moment in time, especially with a nation like Saudi Arabia that is trying to move beyond oil, right? And kind of extend its economy in different ways that does require maybe relationships beyond its borders. So I'm just curious, what do you think Americans need to be wary about in this relationship as it seems to be deepening?
I think with Plan 2030 under MBS in Saudi Arabia, the diversification of Saudi's economy, it being a key member of the IMEEC, the India, Middle East, Europe Economic Corridor, is great in terms of being able to have American companies invited to bid on infrastructure contracts there and to help them diversify it. It's a net gain for the U.S. and Saudi. Same thing with the Emiratis. They've placed their bet on AI. I think the fact they're willing to invest close to $1 trillion to this with Sheikh Takhnoun and his leadership through their ministries for infrastructure and development, it's a win-win for the United States. But the one that I'm worried about is wherein the UAE and Saudi Arabia don't have significant military relations with Iran, don't support Hamas, aren't actively supporting Syrian jihadis. That Qatari trip, the one in which you have a country which hosts one of the most egregious terror organizations to ever commit attacks against Americans, we saw their influence over the weekend, is one that I have to be very wary of, because I don't see what the net gain is for the United States. If anything, it's to our citizens' detriment to do any business with them.
We're speaking with Greg Roman, Executive Director of the Middle East Forum. He joins us from Los Angeles. Greg, I want to dig into what you described as an influence campaign of the Qatari government, specifically when it comes to higher education and indeed K through 12 here in the U.S. What can you tell us about what you found and what you've reported on, and really what the goals are of the government of the country?
So if you think about all areas of American educational excellence, Carnegie Mellon in cyberspace, Northwestern in business, Cornell in medicine, Georgetown in diplomacy, Texas A&M in science and engineering, these are all places where the Qatari government has invested hundreds of millions, if not billions of dollars in bringing those campuses and the intellectual property and the professors to Doha. So if you look at the amount of students that study at Texas A&M Doha, it's Iranian students who more than anything constitute the people who are there studying nuclear engineering, physics, applied sciences. And they take that IP, which they wouldn't be able to access because they wouldn't get a visa to study in the United States, bring it back to Iran, and then contribute to their nuclear program. Even in K through 12, their goal is to try to create a generation of Americans who are sympathetic to Qatari foreign policy goals, so that maybe one person from a million who graduate from one of these universities ends up becoming president. The Qataris have their talents enshrined in them and are able to exert their influence on it. And we see this across business. Dozens of companies, hedge funds, investment funds, all taking Qatari money. And then when the right time comes, they use that investment and they activate it to have their influence.
So what do you make, or what do you believe is the significance of this being President Trump's first planned trip overseas? And you've also served as, I should point out, the political advisor to the Deputy Foreign Minister of Israel. You've worked for the Israeli Ministry of Defense. I mean, how do you think Israel and Prime Minister Netanyahu are looking at this trip?
I think that the U.S. is executing its own interests as much as we elect our president to be able to engage in policies that are pro-American. The Israeli government decides what's best for Israel. And more often than not, the policies mesh where there's a strong, close relationship between the two. But I think at the same time, President Trump is saying we have to have an America first policy. And that's not at juxtaposition where it's just against Israel's interests, but the net gain for the United States in terms of strengthening its relationship with Arab countries will also be a positive gain for Israel. We saw the same exact pattern take place in 2019 and in 2020 with the process that led to the Abraham Accords. And frankly, if I was Prime Minister Netanyahu, I'd be looking at the dialogue between Mohammed bin Salman and President Trump and seeing how close I am now today versus yesterday of having Saudi recognition of Israel and economic relations between the two heavyweights in the region.
And we did hear President Trump mentioning the Abraham Accords in his earlier speech there in Riyadh. I am curious. Do we look back at this moment in time in 5 years, Greg, and say 3 years? I always think about this. Like, is this a moment in time where we are really strongly changing our geopolitical alliances, or midterms or new president come 3.5 years or so? Does that change things potentially again?
No, I think we're at an inflection point. The Abraham Accords was put on ice when President Biden came into office for other reasons, where he was trying to seek deeper relations with non-Arab Sunni countries and with Iran. But now we're basically picking up from where we were in September and October of 2020. More deals will be signed. Trade relationships will be deepened. We'll finally be able to have an alternative trade corridor to the Chinese Belt and Road policy, which has been going through China, Iran, Pakistan, Turkey, and onto Europe. And this is, I think, the reemergence of America as a viable competitor on the global stage with China, embracing our Gulf allies. And at the same time, it's also building closer connections between regional powers that for far too long haven't had the kind of relationship that they should have, whether it's trade, commerce, economy, or military. And President Trump is the glue that's helping cement all this together.
We have 30 seconds left. The president said he wants an Iran deal. He warns it to take the olive branch. Just 30 seconds on Iran while we have you.
Yeah, the Iranians are going to play President Trump along until they don't say that they're willing to dismantle their uranium enrichment infrastructure. I think we're going to get to a point where the Iranians are going to spit in the president's face. I understand why you have to try diplomacy, but at the end of the day, the only way for the Iranians to move forward is to eliminate their nuclear program, either by themselves or by an American strike.
Greg, 15 seconds. China. Is this all happening as the world, the U.S., increasingly is pushing back against China, and just very quickly?
Yeah, this is a global push against China. I think Europe and the United States have no daylight between them. And engaging the Gulf is pushing China out of the region, which is something the U.S. should have done for the last 5 years. It's a good thing it's happening now.
Greg Roman, thank you so much. Executive Director of the Middle East Forum, joining us from L.A.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, speaking of crypto, Robinhood has agreed to buy the crypto platform operator WonderFi. Morgan Stanley's digital asset markets head is leaving the bank to start his own crypto and digital asset investment fund. And the trading tech firm is also, he's leaving to do that too. And Bitcoin is close to an all-time high. Also, the president is hosting that crypto dinner.
And
where's your invitation?
Coinbase?
Oh yeah, being added to the S&P 500. What is it, up 25% as we speak?
Yeah.
Yeah.
I mean, come on, crypto.
Well, that's where I wanted to start with our roundtable.
Right, having its moment.
Mike Regan is Bloomberg News senior editor and crypto digital payments team leader. And Anthony Cormier is Bloomberg News investigations reporter. They both join us here in the Bloomberg Interactive Brokers studio. Mike, that's where I want to start with you, with Coinbase being added.
Yeah, quite a share pop after that announcement. I mean, you know, in some ways it was sort of inevitable that Coinbase would get added to the S&P 500. If you look at its market cap before the announcement, something like $53 billion. I mean, that's puts it in the top half of S&P 500 stocks by market value. I think what kept it out for a while is that Coinbase's earnings can be very volatile. Post a loss some quarters, big profit some quarters, smaller profit the other quarter. So one of the S&P 500 criterium, I guess is the word, is consistent profitability. You know, they want them to be profitable in the last quarter, and they want the trailing 4 quarters to be profitable for a company. So, you know, there is sort of this rumblings you hear that they got snubbed in the last S&P 500 reconstitution, but I think it was more likely, and we never hear exactly what the S&P committee, how they make their decision. But I think they were probably more worried about that earnings volatility than anything else. You know, that said, it is obviously a much friendlier regulatory environment for Coinbase. So a lot of those questions about the case with the SEC have sort of been washed away.
Great. Yeah. Speaking of the friendlier regulatory environment, that was the segue I wanted to use.
Well, go.
Okay. Well, speaking of the friendlier regulatory environment, I want to bring in Anthony Cormier because he's been doing some reporting around the Trump meme coin, the top Trump crypto buyers who've been vying for dinner seats. This dinner is happening supposedly on May 22nd. You and the team dug into the wallets, did some digging, found some details about who these folks are, and it's actually not very clear.
No, we know less now than when we started.
But you did find out a lot.
We did go hand by hand. We one by one through the 20
Wait,
leaders.
lack of transparency on someone who's doing something in the crypto world? Holy moly!
Well, okay, just to set it up, this is the dinner that is happening on May 22nd. It's going to be with the president at his Virginia golf club.
Yep.
And the top holders of his meme coin over a certain period of time would gain access to the dinner.
Top 25 get to meet him in person, get a special VIP tour. 220 get to have dinner with him in Sterling, Virginia. And as you said earlier, it is quite difficult to know who or what are behind some of these wallets. So we went one by one and learned what we could. And that was that more than half of them are likely foreign. 6 of the top 25 are almost certainly acquired their shares from an exchange that doesn't allow Americans to acquire them. And before I walked in this room, I was going through Twitter looking for all of the people who have posted their invites online to see what we could learn.
What's the law on that? And the reason I bring that up is I think about all of us who go through training, who work at U.S. companies. We go through extensive training about who you do business with. If you're, a business deal, a contractor, you've got to know exactly who they are, where the money's coming from. And if there's any questions, you don't do it.
Banks do KYC all the time. They know your customer stuff. There's anti-money laundering programs. Now, in fairness to the president and the meme coin operators, they are saying that you have to go through certain steps. We don't know what those steps are, right? Mm-hmm. In order to get to this dinner, that we don't know what, to quote, KYC watch list you have to avoid to be in this dinner. All of those questions we've posed to the White House, they've thus far refused to answer.
Mike, how are you looking at this as somebody who's covered markets for years? You're now heading up you're senior editor, and you're also heading up the crypto team. There's this idea now that the idea of appearance of conflict of interest, has kind of been thrown out the window at this point. It's a question that I asked Eric Trump about when I interviewed him a few weeks ago. And he basically said, you don't have to worry about this. I never talked to my dad about crypto and crypto policy. But the president does have a hand. He makes money when certain things happen.
Yeah, I mean, I guess gobsmacked is the word I would have in just how brazen it really is. And some of the prominent Democrats are screaming from the hilltops, Elizabeth Warren and others, not only about this, but World Liberty Financial, Trump's other crypto project, introduced a stable coin, a crypto token that's pegged to the dollar. It was just used in a $2 billion equity stake from a Dubai fund into Binance, which, if you recall, was the crypto exchange that just 2 years ago, less than 2 years ago, settled some very major charges with the U.S. Justice Department about basically not having an not having that KYC program in place that Anthony's talking about, or an anti-money laundering system in place, or at least not a robust enough one to catch what the government alleged was, terrorists and all sorts of criminals using that exchange to launder money. So, it's just shocking to see that, what you thought were sort of checks and balances in the government don't really matter if the controlling party is on board with the president and willing to give him this type of latitude.
Where's the financial community? And I bring that coming just off of Milken out on the West Coast. There are everybody and anybody in terms of the financial might globally, certainly in the United States, trillions of dollars, right, worth of capital, assets under management. In the past, crypto has been a topic. But I got to tell you, we talked infrastructure, we talked supply chains, we talked tariffs, we talked private markets, and we talked democratization of things like private credit. I think we had one interview with someone who's definitely into crypto in a big way, but it wasn't a big thing. So where is the financial might and the folks on Wall Street and the big investors? Because who's doing all the activity? Why is crypto, is it just the White House?
No, if you look at especially the SPAC deals being priced recently and being announced, Cantor Fitzgerald, one of their SPACs is teaming up to create basically a company whose main purpose is just to buy Bitcoin and keep it on its balance
Nothing
sheet.
can go wrong with the SPAC.
Right, exactly.
I'm just saying, I know there's ETFs and so on and so forth, but I'm just trying to get an idea of the buy-in. where it's all coming from.
I couldn't speak to institutionals, but doesn't Coinbase now making the S&P, doesn't that expose like my 401k? To
totally.
crypto for the first time? I mean, I think that's a really interesting sort of context right here, where there's it feels like a pivotal moment, right? If I'm a consumer and I don't want to take that risk, now all of a sudden I don't
have a choice.
I don't have a choice, right? Exactly. I think that's really a kind of key moment, right?
I agree with you. I looked at it like that as well. Anthony, I want to go back to this idea of the dinner next week, because with the digging that you did into these wallets and you had them, you looked at different exchanges, you tried to identify folks. You said as you were walking in here today, you're actually looking on Twitter to see who's posted invitations. Right. What have you found that's not in this piece? Like, what have you reported on over the last few days, and what have you seen? Well,
we're trying to figure out who is going to actually do the vetting of these people. And we're really keen to know whether this is happening on the Trump private end or the Secret Service end. I think it's a really vital question. The Secret Service is going to have a much different standard potentially than the White House.
Well, when you say vetting perspective, do you mean from a safety perspective, the background checks? I mean, getting physically close to the president, and especially somebody who's been the target of not one but two assassination attempts over the last year, I would imagine the Secret Service is very, very serious about keeping him protected.
You would think so, but I think the real concern is going to be on the anti-money laundering front, right? Like, how much can you know about some of the operators who have bought their way into a personal meeting with the president? And I don't believe the Secret Service has the kind of tools that someone like FinCEN would in order to understand who's a bad actor and who's not. So I'm curious to know quite a bit more about that.
Yeah, I've seen one of the invitations to the event, and they are, you're going to get searched. Your vehicle's going to get searched. So I'm sure, what is under the control of the Secret Service, to your point, is, they're going to do their best to protect the president. But you're right, though. It's hard.
But the vetting often starts. I mean, I've gone to the White House, and they needed stuff up front before I even stepped on ground. So, you do wonder about what kind of real vetting can they do before they even walk in?
When I reported on the first Trump administration, I had to send my social security number to the White House, perhaps to the Secret Service, before I even went to the White House.
Yeah.
We don't know if that's the case.
Wow.
We truly don't know.
So, Mike, I love what Anthony said about, okay, guys, democratization, y'all now own some crypto, whether you like it or not. Like, that is an important turning point and kind of legitimate turning point, if you will, it feels like, for crypto.
Yeah, definitely.
Or TBD to see.
Yeah, I mean, it's been, one of a series of sort of events that have further legitimized and brought it more mainstream. I won't comment on whether or not that's a great idea for all of our 401ks, but it like it or not, here it is. Coinbase is not only a respectable company, a top, they're in the top half of market cap in the S&P 500. And I don't think, it's not the beginning of the crypto exposure for sure in sort of passive index funds. Tesla owns some crypto. If you look at MicroStrategy, which is one of these companies that a lot of these SPACs are just trying to emulate, that is already in the NASDAQ 100. So if you own that QQQ index, you own a chunk of that too.
There are a lot of companies that have been out there that have had some really big market caps that have gotten, I don't know, I guess time will tell on all of this.
Yeah.
But we'll wait. Mike Regan, Anthony Cormier, thank you guys so much. What a great chat. You're listening and watching Bloomberg Businessweek Daily.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Welcome to America's ICE towns. These are communities convinced that their financial survival depends on locking people up. It's not a new phenomenon. In this iteration of the classic prison town, though, Carol, many of the people behind bars haven't been convicted of crimes.
Let's get to this Bloomberg Businessweek story. It is, I guess you could say, a slice of life in America, but not necessarily a good one. But let's get into it with Bloomberg News investigations reporter Rachel Adams-Hurd. She joins us from our Houston bureau. Rachel, good to have you here. What is an ICE town?
So an ICE town is a town where the local politicians, the local community is convinced that they need these immigration detention facilities that operate under these lucrative contracts with ICE in order to be financially sound. A lot of these towns, they've had a private jail or private prison detention facility for decades. And with Obama-era sentencing reform, the federal prison population dropped off. And so to keep these facilities profitable, they signed contracts with ICE. And now we're seeing just a huge influx in the number of people detained at those facilities under the Trump administration's, mass deportation agenda.
So, Rachel, take us to one of these ICE towns, Torrance County, New Mexico.
Yeah, so we went to Torrance County, New Mexico at the end of March. That's when the county commission was voting to extend this contract. And it's a really rural community. It's one of those areas that used to be kind of this bustling hub thanks to the New Mexico Central Railroad. You had people from all over who would come through towns like Estancia, where this detention facility is located. But then Interstate 40 is built and commerce really just drops off. And so during the Reagan administration, when you're seeing these policies like the war on drugs that's massively expanding detention in America, there are these private prison companies that want to get a piece of that business. And New Mexico was a great place for that for them because land was cheap. They could build these really big detention facilities by the standards of the time. And so that's what happened in Estancia. CoreCivic, then Corrections Corporation of America, built a facility outside of town at the time. It's since been annexed into the town. And things were pretty good for a while. It employed people. The business was good for CoreCivic. But then around 2016, you had the federal prisoner population drop off. And that's when the facility ended up closing, and CoreCivic said it was no longer profitable. And then ICE came in to basically save the day for CoreCivic and offered this contract that guaranteed revenue every single month, whether or not there were any ICE detainees in those beds. And that's the contract that allows the facility to operate today.
So just to set the record straight, I mean, these are facilities that have been around for a long time, different administrations, correct?
Correct.
Okay. And the point is, too, though, that the conditions aren't great and they're needed in order to house kind of the roundup that is happening under this administration, correct?
So during the last 10 years, or I guess 5 years since this contract has been in place in Torrance County, a lot of the people that it was detaining on behalf of ICE, they were recent border crossers. These were people who were coming up the border from Mexico, a lot of times into Texas. They were seeking asylum, and while they were seeking asylum, they had, turned themselves over in a lot of cases, and now they were in ICE detention, being held at the Torrance County Detention Facility and Estancia. After Trump took office, you see a really dramatic fall off in the number of people crossing the border. And so all of a sudden you have room in the Torrance County Detention Facility. And so because you have this room, you're seeing ICE flying people from all over the country, a lot of them coming from New Jersey, from Florida, and they're flown into the Albuquerque airport and bused to the Torrance County Detention Facility. And that is where they're being held for months in a lot of cases. And this facility has had problems for the last several years, and it's really starting to kind of come to a head with the increase in the number of people that it's holding under the Trump administration. Okay,
well, you describe the facilities, at least one of them. What was it like? What is it like?
I mean, what we've heard from people who are currently being detained at the facility is that it's cold, the food is undercooked, inedible at times. We've heard complaints about access to medical care. There are a lot of people who say that they have tried to ask to be deported because they do not want to spend another day in ICE detention, but that it's incredibly difficult to get the attention of any ICE officers because it's all, prison staff, not necessarily anyone who can actually talk to them about their case. But the most dramatic issue that we've heard about recently had to do with the water supply. This is the desert. It's incredibly dry, and the town of Estancia was having an issue with one of its main water pumps. And so that led to water being intermittently shut off to the facility. We heard that there were toilets that were overflowing and that there was feces on the floor, that the smell was overwhelming. We heard people say that they had been limited at one point to 2 water bottles a day, that they were thirsty. At one point, the facility brought in trash cans full of waters to try to flush some of those toilets to deal with the odor and the hygiene issues. And someone we talked to said that he had seen people who were thirsty drink out of those trash cans because they were so desperate for water. So it sounds like this is improving over the last few days. We did hear that ICE was on the ground recently, but certainly it sounds like it has been a rough couple weeks inside the detention facility.
It's interesting because I'm thinking CoreCivic, right, which is the company that's been around and is running these facilities, right? I guess it's close to 4 decades, it looks like. I just remember that period in like investing, like private prisons. Everybody thought it was like this great investment play. But you got to remember, it's people, it's humans, there are conditions. I am curious, like, are these people being held for due processing? Like, who determines the fate of these individuals? It's ultimately the federal government?
I mean, a lot of it is held up in immigration courts, and that's an incredibly slow-moving process, as I'm sure you all know. One of the issues with these multi-state transfers, I mean, people are thousands of miles away from their families, but they're also far away from their lawyers. If they had lawyers in Florida, for example, because their case was there, and now all of a sudden it's in New Mexico, they have to try to find a lawyer that can represent them in a different court, and that isn't always easy to do, especially because these tend to be more rural areas where pro bono lawyers are harder to come by, located farther away from the facilities themselves. So just the act of moving someone to a facility so far away, it does impact that person's right to due process.
There's some context here and sort of like the internal workings of how these communities feel about these that I think is really interesting in your piece. County commissioners and how county commissioners look at this. You highlight Linda Yamarillo, who of the Torrance County Commission, who actually did go inside one of these facilities. And then you and the team wrote that she voted to extend the ICE contract. Talk to us a little bit, and it's not really town-gown relations, but it's the way that the community feels about this and the way that local elected officials feel about these.
Yeah, it's really striking to sit in on these county commission meetings because, you know, the contract is up for an extension every so often, every several months, but no matter what, at every meeting, which is held, you know, bi-weekly, there are a bunch of lawyers and advocates and even people who are in detention who record testimonies that they play to the commissioners during public comment, urging them to shut down Torrance County Detention Facility for ICE detention. And you have these 3 commissioners who sit at the front of the room and they're listening to this. And some of the testimony is in Spanish, and Commissioner Jaramillo speaks Spanish. And so you can kind of watch her face as she's listening to people describe the conditions inside the facility. And what she told people at that meeting in particular was, look, I hear all these concerns, but I don't know what to trust. And so she ended up voting to extend it. Sorry, I lost my earpiece, but but it's unclear whether she'll do that in October because she did go again and say that things seem to be going well, but she does still have concerns.
You know, I think it's interesting. And what I find fascinating is that this is a story that's got so many different angles to it. When you think about what these detention centers do for a local economy, there's that. But there's also then, as we've been talking about, the conditions, and you do wonder about the oversight, especially in an administration that has been cutting back on some of the federal spending in different areas. So, you know, Rachel, when you look at this story and this reporting, I mean, the cities or the local municipalities in many ways want them, right? Because it provides jobs, it provides some economic momentum. At the same time, there are concerns about kind of who's watching out for what's going. What does CoreCivic say about all of this?
Yeah, CoreCivic talks about how many people they employ locally. They talk about the salaries and the benefits that they provide. They, say that I think they said that they hire or have more than 300 jobs in related to these facilities in New Mexico. So, I mean, they definitely see themselves as a major local economic benefit to the area. And that's, you know, what we heard from the Estancia mayor as well. I mean, he talks a lot about how much of the gross receipts tax, which is New Mexico's version of a sales tax, that CoreCivic contributes to. So it's interesting to hear kind of I mean, I think Commissioner Jaramillo's put it succinctly when she was like, on the one hand, they're a major employer.
Yeah. Such a great story, so much in there. And as we said, it's a slice of life in this country. Bloomberg News investigations reporter Rachel Adams-Heard. Rachel, thank you. This is Bloomberg.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everybody. 18 minutes to go.
TikTok.
18 minutes. A lot can happen in 18 minutes. You know that?
How was yesterday?
How was just? Oh my God! I wish you were here because, well, first of all, we missed you. Both Matt and I missed you. We're like, let's just bring it. Let's just do it like three. The three of us.
That'd be fun.
It was quite a rally.
I bet.
But it was boring.
Really?
Everybody who came in and we talked to,
They're just like, this is what happens?
This was a boring rally.
Okay.
There was volume, but it was kind of boring.
Okay.
Which makes you kind of wonder, I don't know.
So we're back to where we were January 1st.
Yeah, but it was just, I don't think everybody was like, okay, this is it. All in, everybody. I know there's a lot of estimates changing on Wall Street and so on and so forth, but that was kind of the feeling.
Okay. Thanks for the update.
Boring.
I am read in now. Fully read in.
That will not be a question on Pointed.
On the quiz.
All right, let's get to it. Time for the drive to the close. Karen Vera Perry is with us. She's managing director, head of iShares U.S. fixed income strategy over at BlackRock, joining us from San Francisco. Karen, good to have you here with us. BlackRock, you guys see so much. World's largest asset manager, 11.6 trillion and counting assets under management. How are you?
I'm doing great today. Thanks for having me on.
Well, it's great to have you here. We did have a bounce back yesterday, but I am curious. You guys see so much in terms of flows and where investors want to put either new money, move money around. How would you describe kind of the bounce back we have and where investor flows are going and what it says to you about investor sentiment, which has been rather nervous over the last month?
Yeah, I mean, we love watching bond market trends through the lens of exchange traded funds. So when we look at the ETFs, we get a great view on what's going on. A lot of investors are still just waiting and seeing. They're still sitting in cash. We actually have our short duration treasury ETFs have seen the most flow year to date at $17 billion. So I think investors are being really cautious. They people like these rallies where we're getting back to levels we were earlier in the year. But we're seeing people kind of waiting and seeing both on the stock and bond side. They're sitting in cash. They don't want to take on too much duration in their bond portfolios. And then they're a little bit nervous sometimes about, entering these rallies a little bit too early.
So let me just clarify. So among the fixed income universe year to date, where you're seeing the most money move in is in your short duration fixed income ETF, about $17 billion.
That's right. And then across the industry, about a third of all ETF flows are going to short duration vehicles. So we're still seeing that as a trend, not just with us, but within other vehicles across the industry.
How are you looking in terms of like competition with money markets in those short duration vehicles?
Oh, that's a great question. We do see people wanting to diversify out their cash. We actually launched two different fixed income ETFs that are actually money market funds. They meet the 2A7 requirements. We have a prime fund, PMMF, and a government fund, GMMF. And I think for a lot of people, they like money market funds. They like the stability that they offer, but they also want that intraday and exchange traded liquidity. So I think that's been a big trend where people are looking at their money market funds. They want the yields to be competitive. But in some cases in their brokerage account, if they want a little bit more yield, they might turn to maybe a short duration treasury ETF or even one that has some credit risk associated with it.
How much time are people spending in these assets? And then when they do take their money out, what do you know about where it goes?
I would say on average, people are spending 6 months or more inside some of these assets. And then when they're taking out, I think people are really getting their asset allocation back on track. Kind of coming into 2024, we saw so many people that were overweight equities, underweight bonds, and overweight cash. So I think if anything, some of those cash underweights have been taken down a little bit. With equities off, we saw some rebalancing back into equities. But I think overall people are really holding tight, and they want to see a little bit more clarification about where things are going until they really fully move into markets. So that's going to be a big trend that we're seeing, is when money comes off the sidelines, we'll see that being a big catalyst for both bond and stock markets.
So I am curious, Karen, are you looking for some kind of full market capitulation or full investor market capitulation? And if we are, have we seen it?
I don't think we've seen it yet. I think people are definitely on just channeling Jerome Powell's energy from the press conference last week. People are waiting. So I think they're looking for, when is the Fed actually going to cut? And just looking at the Fed funds futures today, the first cut could be as late as October, and the market's now only pricing in 2 cuts this year. So I think it used to be a pretty easy playbook where you'd look and say, oh, the Fed's cutting, I'm going to add to my bonds, add to bond portfolio, take duration out. But I think because we keep waiting and pushing out that first cut, that's really going to be a big catalyst for people coming back to the bond market, maybe feeling a little bit better about the stock market, because that also means inflation is under control. So I think that Fed first cut is going to be, or next cut in the cycle is going to be a big catalyst for that.
The president, just before our program started, put out a post on social media that said, no inflation, the prices of gasoline, energy, groceries, and practically everything else are down. The Fed must lower the rate like Europe and China have done. Is the president right? Should the Fed be lowering rates?
The Fed's been really focused on the data. And I think one of the interesting things about the CPI report is it had some of the impact of some of the tariff policies, but I don't think that's been fully transmitted. So we've seen the hard data, like the CPI print, hasn't really shown what the sentiment is showing out there. So when it's a more survey-based approach that's based on sentiment, we've seen a lot of people being very nervous about inflation going up, small business and CFOs. So I think we're seeing it more manifest itself in the sentiment than in the hard data. And the Fed's really looking at the hard data, and they haven't seen, so even though this inflation print came in a little bit softer, and those categories you mentioned didn't increase, CPI is still running about 2.6% year over year. And the Fed has that that barometer about 2%, trying to get it back down in that range. So they're very comfortable keeping it higher for longer and just waiting it out. So if we did see inflation spike in the next couple prints, it would get pushed out even more. But I think we'd need to see it come down to more that 2% year over year before they would definitively move.
So Karen, it sounds like you think the Fed is spot on in terms of its monetary policy.
Yeah, I don't think they're making a mistake here. I think that they're being patient, and they want to make sure that they don't move too quickly and then cause some other problems. So I think that's really, their primary mandate, and they've toggled back. They have that dual mandate where they focus both on the economy, unemployment, jobs. Then they also are focusing on price stability. And right now, they've really zeroed in on that because unemployment still looks pretty good. The April jobs report was pretty strong. Unemployment rate around 4.2%. So I think that they're just hyper-focused on inflation right now, and it's not fully down to where they want it to be.
Just very briefly, the Fed behind us, that was last week. We got CPI today. We did also get some clarity on trade from over the weekend and yesterday. What's the next catalyst for you? Just 10 seconds.
Let's look at the June Fed meeting. We'll get the dot plot, that summary of economic projections. Look to that. So people are going to be dissecting that and see how the Fed has modeled in the impact of trade on the economy.
All right, we're going to leave it there. Hey, Karen, thank you so much. So appreciate it. Karen Very Perry, she's head of US iShares fixed income strategy over at BlackRock, joining us here on this Tuesday from San Francisco.
This is the Bloomberg Businessweek Daily podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.